Hello, Meg.
Hey, Brian.
Welcome to our Fishbowl chat.
It is Fishbowl Chat Day.
Yes, ma'am.
All right, so we got a couple of different things to talk about today.
Yes, I have my notes.
So, first thing I'd like to talk about is condo assessments.
Okay.
Once again, we've had an issue with a condominium association and a lender talking about special assessments.
Right.
And it's such a broad topic, so that sometimes these condo associations just say we're making structural repairs, and it becomes this big nightmare. So maybe you can touch on a little bit of what's going on. I know it came from Surfside when it collapsed because they had a report back in, I think, 2018 that said there was structural damage and they never did anything. So now I think every condominium is
Well, you're right, but
supposed to be doing
I think it
something.
was happening before that, though.
Oh, I'm sure it was.
I mean, remember the one that we had? It was a couple years ago. It was before Surfside. Remember
Yeah.
with the young guy? And that anyway.
I understand. Yeah.
So anyway, let me talk about condos for a minute here, just for in general.
Mm-hmm.
So most people don't really realize the challenge that condos present as far as selling and buying them. And it's not insurmountable, it's not terrible or anything, but it's something you want to be aware of. Number one, the key with condos is it is actually way harder to get financing on a condominium than it is on a single family home. Because on a condominium, pretty much in virtually every instance, they have to go through what's called a condo questionnaire. And that does not exist, obviously, on a single family home or anything zoned as a single family home. As an example, a townhouse could be zoned as a condominium, and in that case, it falls under all the same rules that a condo does. Or a townhouse could be zoned as a single family home or a villa, a townhouse or a villa could be a single family home. And if that's the case, then the financing, for the most part, is pretty much exactly the same as it would be on a normal house.
Correct.
But on a condo, it always has to go through this questionnaire, and we'll probably do another video on that. I don't want to get into it, but you ought to be aware of the limitations.
Two different types.
Right, but here's the key. Before you even get to where we're at, what we're talking about, you have to get through this first hurdle of the financing. And most people aren't even aware of this at all. Most people think that, I can get financing on a condo. Oftentimes you can't. And sometimes the threshold's 25% down payment. But what Meg's asking me about specifically is even after you've gotten to the point where it kind of makes sense and you have a condominium under contract to purchase and you're going through the underwriting process with your lender, then what happens is actually this was on the questionnaire, not addition to, it was part of the questionnaire, that special condo questionnaire. They asked questions about if there's any assessments or any weird stuff going on with the HOA, and then the HOA manager fills it out, and whatever they write in there is judged by the underwriter. And the major thing that's a big red flag that we've come across a couple times are structural improvements that they're assessing for. It's not really the assessment that's the problem. That's just a money thing. It's what they're assessing for. Mm-hmm. And in this case, if it's structural, it's basically an instant red flag for a lender.
Correct.
And we've had it happen multiple times. And it's something that you want to be aware of. And sometimes there's resolutions for it, sometimes there's not. However, if the lender kicks it out and says it does not qualify based on that questionnaire, then it's dead. And there is one way to mitigate it, which I kind of alluded to, which is that if you put down 25%, then you would get what's called a limited review, which is a shorter version of the questionnaire. I don't know if that would help us in this instance.
I don't think so. I think that is still a question on there now because of Surfside. They've
That's
added
true.
it to everything.
I actually think it was before Surfside. But at any rate, Surfside I'm sure didn't help. Mm-hmm. And also, in addition to that, at least with the limited review, if there are other questions on there that would disqualify it, those don't apply. But to get to a limited review, you have to put down 25%. Anyway, I think I'm getting pretty deep in the weeds. If you have any questions on it, if you have a condo or concern or just want to know about it, feel free to call me and I'm happy to share it with you, all the details. But anyway, that's what we're facing, and it's a bit of a challenge.
It is.
So just want to make people aware of that.
Next one is, most everyone has filed their taxes and done their taxes.
Their personal income taxes.
Their personal income taxes. We've had a couple of people talking to us about capital gains and how does that work with real estate.
Yes. So capital gains on real estate. Number one, seek the advice of an accountant. Realtors are not accountants. We do not file taxes. We know Some of us know enough to be dangerous, others don't. Regardless, we are not responsible for your taxes. So if a realtor or anybody else who is not an accountant tells you something incorrect, you're still the one that has to pay. So seek the advice of a competent accountant. We have one that we recommend who's excellent, and if you'd like their information, I would be happy to provide it to you. And otherwise, feel free to ask us questions about it, but I wanted to make that little disclaimer up front.
I think it's important, yes.
So basically, how capital gains taxes work is if it is your primary residence, and if I read this correctly, I believe that the definition of primary residence is you have to live there for more than 50% of the year, and you have to have lived there for more than 50% of the year for at least 2 years of the last 5 years, if I read that correctly. And if it is in fact your primary residence, then you do not have to pay capital gains tax up to $250,000 in gains or $500,000 for a married couple. So that's kind of the key there. As long as your gains are calculated within those boundaries, you won't have to pay capital gains as long as it meets the criteria of your primary residence. Now, of course, if you own any other real estate beyond that you're selling, that would not be considered your primary residence, and that would be exposed to whatever normal capital gains exist.
Correct.
There is a methodology they use to calculate what's called your cost basis for tax purposes, which is well beyond the scope of what I want to get into. It's moderately complicated, and they take into consideration costs and appreciation and depreciation and so on and so forth, and it's complicated. And that's why you need an accountant. A competent accountant really should be doing this for you, and it could be a big difference in taxation if it applies.
Right.
You know. So anyway, we want people aware of that because we've gotten a lot of questions on it. They're good questions. And if you have more, we're happy to chat with you and share with you all of our knowledge on that and steer you in the right direction. But nevertheless, I believe that's pretty much how it works.
Okay. We have an event coming up, a client event.
Oh, yeah.
VIPs, our regular clients. Can you tell us about VIP program again?
Sure.
Which we've already touched on, but let's let people know what a great thing it is.
Well, let's not bury the lead here, Meg. I mean, we're talking about Tom Cruise. We're talking about Top Gun, the sequel. What's it called? Top Gun Maverick? Top Gun Maverick. I'm talking about Maverick here, okay? Let's not bury the lead. That's what it's going to be. So what we do is, at minimum once a quarter, oftentimes more than that, we do client appreciation events where we put on some event where we just like to thank everybody in our orbit just for helping us, supporting us, being a part of it. And even if you don't, you're welcome to come to meet us, to participate, and we'd love to earn your business. And by the way, a lot of these people aren't ready to buy or sell a house, and we're fine with that. This is just to thank the community, thank our clients, thank everybody, and do something cool and fun and nice that you'll enjoy, and also we enjoy too, kind of, because we don't do stuff we don't like.
I'm looking forward to it.
Because we like Top Gun, you know. And so what I'm going to do is I'm going to rent out a movie theater. That's my intention. And I'm going to invite everybody that wants to come within our sphere here, right? And if you're watching this video, you're pretty much invited. There is a process to officially put your name on the invitation list. There is a limited seating, but I can actually increase that to a degree. And so just make sure when we send it out that you just register right away to make sure that you get your seat. But don't worry about it too much. We'll work something out either way. But at some point we may reach capacity because we have a lot of people like Top Gun. And so that's the first part. The second part of it, we have our VIP program. And to define a VIP for us, a VIP is somebody who has referred us business. So we love everybody, we thank everybody, but there's a special little place for us for those people that have referred business to us, and we'd like to do something super extra special for them. So the Top Gun movie theater thing is going to be for a lot of people, but the VIPs get first dibs. So it probably will fill up, and they get to kind of get their first tickets. They're guaranteed. And also we have some really cool extra stuff that's even well beyond that we're going to give to them as well. So that's what the VIP thing is. And so if you'd like to be in our VIP program, all you need to do is, if you know of anybody looking to buy or sell, just give us their information, and you are automatically a VIP for the next 3 within that quarter. And we're going to do something nice and special for you. And the Top Gun movie isn't exclusively for that, but you are included in that if you are a VIP, and you know who you are if you are. And also, we give you all kinds of cool extra stuff that is well in excess of just the movie. So anyway, that's that, and that will be coming up. I think we're planning on early June, which is kind of near Father's Day, because it's going to be released at the end of May. Father's Day is like middle June.
Right, third Sunday of the month.
So, and then we're kind of doing it right in the middle somewhere. We're ironing out that date precisely right now, but we're gonna bank on doing it right in the middle there for kind of a Father's Day fun, kind of cool thing. It's gonna be like probably a Sunday matinee kind of Saturday matinee or something like that. I think
we have the need for speed.
The need for speed. Yes. Unfortunately, who's a Goose? No, not Goose. Who was Val Kilmer's? Iceman, I don't believe will be in this.
No, he's not in it. They talk about him, I believe, because the actor is no longer acting.
Yeah, Val Kilmer's probably out of the biz, right? Yeah. Anyway, Tom Cruise, on the other hand, is not out of business. He's right in business, so we'll be there.
All right, that's all I got for today's Fishbowl.
Thanks, Meg. Looking forward to it.
Bye.
Bye.